Most people think Bitcoin is the plan. You buy Bitcoin, you hold it, and you just wait for the price to keep going up. But that's not a financial strategy. That's just an asset. And the thing most people don't realize is this. Bitcoin only works properly when it sits inside something much bigger. A system where you save, invest, and generate money. So what I'm going to do in this video is explain a framework I use with my personal clients. It's called the money machine. It's a simple way of understanding how wealth is actually built, and more importantly, where Bitcoin actually fits inside that system. Because once you understand this, something interesting happens. A lot of the emotional stress around Bitcoin starts to disappear. And real quick, I just want to credit Tony Robbins. He's the one that actually came up with this money machine method. And yeah, so all credit goes to him. In this video, we're going to look at three things. First, the structure of what Tony calls the money machine. Second, the mistake most Bitcoin investors make when they ignore the first half of that system. And third, where Bitcoin actually belongs inside a proper wealth plan. Because when you understand those three things, Bitcoin starts to make a lot more sense. I'm Harvinder. I've been in Bitcoin since 2015, and I work with professionals who really want to understand Bitcoin and invest in it properly. They're not chasing hype and they're not trying to get rich quick. They're interested in building a system that generates money over cycles. Let's start with the structure. The money machine by Tony Robbins. It's very simple, and it looks like this. You have income, you have expenses, you have a surplus, and then you have your investments. And then that compounds. Your income generates money. Your expenses determine how much of that money you keep. The difference between those two is your surplus. That surplus is what actually gets invested. And those investments compound over time. A quick example. If you make $5,000 a month and your costs are $3,500 a month, then you've got $1,500 to play with. And you could, if you're smart, invest all of that $1,500 every month. So every month you're investing $1,500. That's the machine. Wealth is not created by one lucky investment. It's created by a system that consistently feeds investments over time. And this is where a lot of people misunderstand investing. They focus almost entirely on the final step, the investment itself. But the earlier parts of the machine are what make that system actually work properly. Most Bitcoin investors skip the first half of this machine. And to be fair to them, they don't even know about this machine. They go straight into the investment. They focus on the price. They focus on timing. They ask themselves questions like, should I buy Bitcoin now? Is this the top? Is the price going to double? But they rarely ask the more important question. How stable is my income? How much can I realistically invest every month? How long can I leave this money invested? Or what happens if Bitcoin falls 50%? Because Bitcoin can fall 50%, it just has. And it probably will do many times again. And when people haven't thought through those questions properly, they end up putting enormous pressure on that one asset. And what that pressure causes is just problems. The pressure problem. This is something most people only realize after they've experienced it. When your financial future depends on one investment and that investment working quickly, the pressure builds. Every price movement suddenly feels important. Every correction feels dangerous. People start checking charts every hour. They start questioning their decisions. They start listening to more opinions online. And eventually they make bad emotional decisions. So the problem isn't Bitcoin. The problem is that the system behind the investment isn't stable. There probably is no system. So when that machine is weak, the investment feels stressful. And when the machine is strong, volatility becomes a lot easier to live with. I actually see this with clients quite a lot. Two people can buy exactly the same asset at exactly the same time, same price. Let's say both of them buy Bitcoin. The price goes up over time. On the surface, it looks like both investors are doing well, but their situations are very different. One person has a stable income. Their career pays for their lifestyle. So they don't need to touch their investment. They don't need to sell their Bitcoin to live. The asset just sits there and it compounds. Income, lifestyle, Bitcoin, compounding. But the other person is in a completely different situation. Maybe they don't have strong cash flow. Maybe they put too much of their savings into the investment. Eventually, they need the money. They need to pay for their life. So they start selling their Bitcoin. Not because they want to, but because they have to. And over time, the asset slowly disappears. It's the same investment, same market conditions, just completely different outcomes. And the difference isn't Bitcoin. The difference is the actual system behind it. This is why strong cash flow matters so much, because cash flow allows your investments to stay invested. Bitcoin works best when three conditions exist. First, you don't need the money anytime soon anyway. Second, your lifestyle doesn't depend on the price. And third, you can hold through full market cycles. But those conditions only exist when the earlier parts of the money machine are working, when income is stable, when expenses are controlled, when surplus is consistently being invested. That's when Bitcoin becomes powerful, because it becomes part of a system, a long-term system, a long-term compounding system. So here's the key idea. Bitcoin isn't your money machine. Your career and your cash flow are. Bitcoin is simply an engine that sits inside that machine. And when that machine is working properly, that engine can compound wealth over time. But without the machine, even the best investments in the world become stressful. So the real question isn't, should you invest in Bitcoin? The real question is this: does Bitcoin sit inside a system that allows you to hold it properly? Because when the system is right, the investment becomes much easier. Ultimately, you need to live within your means. If you're making $5,000 a month, make sure you don't spend more than $5,000 a month. Ideally, you want to hold back at least 10-15% so that you can save for your future. The worst thing you can do is overspend. And I've done it. I know other people that have done it. Just don't spend more than you make. Live within your means. Save and invest the difference. And honestly, the real answer isn't buying Bitcoin. The real answer is having a real cash flow money machine. And for most people, I would say that's business. So get into business, make as much money as you can, and then you can invest that, and then you can live financially free. Listen to people like Alex Hormozy if you don't know what to do. In another video, I'm going to take this one step further and explain why Bitcoin should never be the entire plan. It's just one asset inside a much broader strategy. If you found this video useful, make sure you're subscribed, and I'd be interested to know, do you guys know about The Money Machine by Tony Robbins? Are you investing consistently? Do you even know your expenses? Are you even investing? Let me know in the comments. For those that want to take this a little bit further and you do want to learn how to invest in Bitcoin, I've created a separate video. It's the system that I take my one-on-one clients through, A to Z. What platforms to use, what email accounts to use, how I do my security setups. It's linked in the description below. It's free, there's no opt-in, and it's definitely worth a watch. Thanks for watching.